in less than 12 hours. I'm your host, Steve Van Metre, and thanks for joining me today. And our show today, consider yourself warned, because all eyes on the market are going to be focused on this one country as we head into the opening bell on Monday, because they're on the verge of unleashing economic Armageddon. I'm going to show you what this country is doing, and more importantly, why they're even hedging their own currency. This is going to create tremendous number of opportunities. We'll show you all of them and how to trade them, which is why every Sunday we like to look at the technicals, momentum, and machine positioning of the market to help you make more money as a trader and investor. And speaking of making more money, one of our sponsors is back, Foremost Lithium. You can find them on the NASDAQ under the symbol FMST. The reason you want to put them on your trade screen is the 9-day moving average is about to make a positive cross the 21-day. I'm going to show you the chart. The last time this happened, the stock jumped about 35% over the next couple of weeks. On top of that, they're waiting on some assay results from a recent drill program. If they come back positive, look for the stock to jump even more. Again, on the NASDAQ under the symbol FMST. Now, let's head over to Bloomberg, where we picked today's story up. Again, Foremost Lithium. Stay tuned to the end of the show or check out the pinned comment or description for more information. As now we look to China, and all eyes are going to be on this Monday morning as the yuan red line response is traders eyeing Monday fix. Now, keep in mind, we've talked about what happens when fiat currencies are let slide down to zero. It leads to economic Armageddon, and China has been hedging their own currency in a big way. We'll show you what they're up to and how, again, you can make money at this, as China's policymakers have always been vigilant of currency pressure, which can spill over to local stocks and bonds, despite the fact that the country's export engine would benefit from a weaker yuan. Now, that is a fantastic macro case. Let your currency slide, pick up your factory sector. This would be huge. This would also take pressure off the consumer prices here in the U.S., something the Fed would love. The problem is they have to sacrifice their currency, and stability is prized, because a rapid yuan drops can also lead to a vicious cycle of capital outflows and exasperated losses, and that is the danger sign we're going to show you now. Let's talk about what China is doing, because they've been buying gold. That is important. The PBOC is hedging their own currency here, and that is creating, of course, an upside catalyst for gold, but it's also creating some other opportunities as things that normally trade alongside gold are becoming decoupled, creating tremendous trading and investing opportunities. If you're looking for stuff in this market, we'll show you what those are. As China's official reserve assets rose to the highest since November of 2015. The country's foreign exchange reserves rose to a whopping $3.25 trillion by the end of March, the highest since December of 2021, as the central bank aims to maintain stable holdings to fend off risk. Perhaps maybe the risk is the yuan continues to crash, and of course that maybe means that China turns even to a gold standard, if you can imagine what that will do to the price of gold. But there's some other factors here that are going to come into play, because if their currency is allowed to fall, again, it starts to create economic Armageddon, and that means other opportunities, as gold's defiance of real yields can't last unless, well, there's trouble brewing, and that's exactly what we're seeing as gold surged to record highs is extraordinary, coming as it does in the face of elevated real yields. That's inflation-adjusted yields that would normally bring it crashing down. Now, if you missed out on the gold trade, don't worry about it. There's always other opportunities in the market, because that signals that the metal is either likely to rapidly reverse. We'll look at a chart of this, or risk assets face a collapse because of an economic or financial crisis. And when that happens, real yields go up in a big way. That means interest rates come down. There's opportunity. We'll talk about that in a bit. Let's head over to Goldman now. We're looking at machine positioning, because this is a market that is massively overbought. Everybody's in this. You see systematic traders, you see machine traders, you see retail, institutional, hedge funds. Everybody's long this market, and you can see by this chart here that it would take just a small correction in the market. Here, Goldman says a 4 to 5% correction will force a mechanical deleveraging from strategies that are sitting at a max max long. Now, if you are invested long this market, that should be the indicator to do something on the show. We strongly encourage everybody that, my friends, raise your stop loss levels. Let's take a look at what's going on in the S&P now. We're going to look at, of course, the technicals, momentum, and more importantly, the machine positioning. Here we see momentum still long the market. The relative strength index has been cooling off. The MACD's got a negative cross here. Now, our own Momentum Timer Pro, this is a wonderful report that takes a look at all of these different technical indicators, but adds a proprietary overlay and smooths it all out. It makes trading so much easier. I'll show you some examples of that. And right now, you can get a 30-day free trial. Links are in the description. Check out Formal Lithium while you're there because you want to supercharge your trading. Here we have back on November 3rd, a buy it open at 433.14 that trades up 19.7%, and we're raising the stop loss level. Look, the risks are getting high. We want to hold on to those gains. We see the next upside target at the all-time highs, downside target 50-day moving average. And notably, see, we have our machine position here. This is our CTA Timer Pro that we run historical overlay against the machine positioning, and it's predicting the machines are going to sell, giving you the edge, whether it's machine positioning or technicals, or maybe you want to trade both and really make a ton of money trading. You can jump, again, 30-day free trials in the description below. How about the NASDAQ? Well, let's look at the chart here for the S&P 500, because here's what I want you to see is indeed looking at the 10-day volume profile. What do you notice? Price now is trading below that. Sellers are coming in here at the top of this market and they are starting to sell. This is an early warning sign. Again, why you don't need to close out, but maybe raise those stop losses up, maybe take a little bit of profit here and look for a pullback, because if we see this machine deleveraging occur, it's going to create tremendous opportunity. And that's how you make money in the markets long term. You got to hold on to your gains and look for other opportunities. We give you all the other opportunities. You just have to handle the trading of it. Now let's take a look at the NASDAQ, and what do we see? Similar situation, but the bigger issue here is we're in the midst of the buyback blackout window. We know tech companies are the biggest buyers of their stock. So here, what are we surprised to see? Well, not at all, because momentum's negative. MACD's got a negative cross. The RSI is decelerating down. We don't have a position that we got stopped out of this a little while back, but normally look at the machine positioning on our fast algorithm and our slow algorithm are leading where the actual machines are going, because we have that historical overlay. They don't even trade with one, but we show you. And how about our course technical program, Momentum Timer Pro? It is saying the beginning stages of a reversal here starting to occur. And look at the 10-day chart. What do you see? Volume profile here. This is where the most shares have been traded over the last 10 days. Sellers clearly above. So the risk in this market is starting to get very, very clear. Now, someone has asked, Rabili, Steve, will you cover small caps? All right, my friend, here you go. You wanted them, you got them. Let's talk about IWM. Momentum here is negative. RSI decelerating. MACD's got a negative cross. And now, notably, we're not having a position on this because we haven't traded this one on the show. But look at our machine position. You can see the downside move across all the major indices on a historical basis. You're starting to see on a tactical basis, from momentum perspective, sell signals start to pop up. And then we go and look at a chart. And what should we expect to see is that buyers are getting hurt here. If you notice, the sellers are dominating this chart over the last 10 days. Now we could zoom out, and what we see, well, there you go. Look at all of these sellers above here. So the market is shifting here, while retail is bullish as can be and eager to buy this market. There are people selling. Again, you get like a 4 or 5% drop, and what happens is the machines start to unwind in a big way. That, my friends, is indeed dangerous. But one thing that everyone's been cramming into right now is the energy sector, and I wanted to cover that too. Here we have XLE, and some of you say, man, I wish I would have traded that. I wish I would have gotten in that. I'm going to show you how you would have using our tools. Momentum positive. RSI is at 84. A relative strength at 84, massively overbought because everybody's chasing it. MACD, no surprise, positive cross. Our Momentum Timer Pro put this signal out 50 days ago. I'll show you what you could have made had you followed our reports. How about this upside target? This is a recent all-time high targeting that. Downside target back to the 21-day moving average. Our machine positioning matches what everyone says that that this is already max long. We see from a momentum standpoint, this thing is nearly at record long momentum. This is dangerous territory here. And yet, what do you see? People cramming into XLE every possible way. And sure enough, you start to look at this chart. Look, it just totally broke out here in a big way. But look at this. We'll zoom out to the weekly because that's what we need to do. And you see one top, two top, and maybe this breaks out. But if it doesn't, watch out. The risk level gets really high here. But let me show you something incredible. You say, man, I wish I could have traded that. Wish I could have made money. Well, back on January 25th, our CTA Time Pro went from max short and flipped and started short covering. That was your indicator to buy. You'd be up 19.07%. That would be a $953 profit on a report that cost you $330 a year. Had you waited and were on Momentum Time Pro a day later, you'd still be up 17%. You'd still be up $852. Your cost for the whole report $220. The better signal was on CTA. The validating signal here was on Momentum Time Pro. People ask all the time, can you make money using your boards? You can make a ton of money using them, and it's just that easy. Now, we talked about the show, starting out with the yuan. We're going to look at currencies a bit later, but the discrepancy here is gold is rallying, which means real yields could head up. In order to do that, of course, that means we need to see yields come down. That would put an edge to the bond market, which does not follow gold here. So let's talk about TLT. The momentum is still negative right now. We have 5 consecutive daily sell signals. The RSI is getting back down here near oversold territory. We got a negative cross on that MACD. Now, on this trade, we didn't use stop losses, so we're down 4.2%. Here's what I'm going to tell you on the show. If this flips off the short position, we're going to add another position, continue to dollar cost average here, because a lot of people get stuck in a trade and they just eat their loss. And so don't just use our tools, dollar cost average back in, and maybe it'll turn out to be a big hit, or you can get close to where you were at even and get out. And now we're looking at upside target. We'll show you 93.63 downside target moving down a little bit. I'm not thinking this thing drops a whole lot from here because buyers have been very, very clear about what's going on with TLD. You can see sellers came in looking like what's called a bear trap here, where sellers try to dominate, but buyers step in. How do I know there's buyers stepping in? Well, look at this 10-day chart. Price come down, buyers jump in, down, buyers, 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 and still yet more buyers. If this holds down in these levels and rallies up, you want to take a position in this. Look for a breakout of 92.61. That's where the sellers are at. That starts to flip. Your next then breakout point becomes 93.67. You get ripped through that point, and now you've got short covering here off of this right triangle. You got sellers here, 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 and here. You start to create some big upside catalysts. The key part here, maybe you missed out on the gold trade. No big deal. The bond trade is telling you if gold is real, if you believe gold is really doing what it's doing and China's hedging its currency for a good reason, that tells you economic instability coming, interest rates headed to the downside in a big way, and we give you the tools to trade it even better. How about gold? Let's talk about that. Now, we didn't pick this trade up, but our signals on our reports did. I'll show you how amazing our reports did at picking this up off the lows. RSI, this thing's way overbought. Everybody's crammed in gold. Everybody's crammed in energy. MACD, positive cross. Friday's closing up here at 215. Where does this go? I don't know. When you break out to new all-time highs, anything's possible. Machines max along this thing. Momentum not maxed out, but getting it there quickly. But check this out. Let's look at a chart of gold here really quick, because there isn't much to see other than a massive rally in price going on here. Again, everybody is worried, and yet here you see usually stocks that go vertical, well, there's a point where that doesn't last and they come down. Doesn't matter if it's metals or bonds or stocks, eventually things change, so keep that in mind. Now look at this. If you said, man, I wish I would have traded gold properly instead of buying at the top, well, back on November 12th, our CTA program flipped from a max short position, which is what we tell people to look for. You'd be up 23.6% or nearly $1,200 profit on a report that only costs you $330 a year. Our Momentum Time Pro gave you a validating signal the same day. Of course, if you took them both, you'd still be way ahead, as your total cost would only be $550, and you would have had a monster of a trade. This is what our reports do for you, my friends, making trading easy. Okay, now let's go on to, of course, gold miners. This up a bunch as well. Momentum here positive on GDX. And what do we see? that this thing could go higher. I'm going to make the case that Friday's closing, that 33.84, could see it move up to 36.26. Now, you notice we got stopped out of this, but not everyone did. Momentum. Long. That's okay. It could go longer. You notice on the 3-month window here, it's still on the sell side. How about machine positioning? This thing's max long. Let's take a look at GDX. I'll show you where I think this thing can get to, particularly as you see the metal continue to go higher. Here you have GDX. There's your next target, 36.26. And can that happen? Absolutely. We know that mining stocks, once they break out and rally, this is all about upside. We gave you the signals way down here. I didn't bother making a slide for it. I think it's pretty obvious for the recent subscribers. They're up 20 to 30% on their GDX trades. How about DBA? Look at this. RSI is at 77. MACD positive cross. 55 consecutive daily buy signals. I showed you this trade on the show. All you had to do is follow it. December 18th, you bought. You're up 19.66%. We're going to keep raising our stop loss level up. Momentum is stretched here, but this thing's got a little bit more legs. I'll make the case for that here in a second. Let's pull up DBA. And man, this thing is going vertical, but there's some underlying catalysts here that could send this thing even higher. Here we'll look at the 10-day chart. This thing can realistically zoom up here even more, and there is a back on the reason that is soybeans. We'll show you that in a second, but there's a trade right off our reports, right done live on the show, because let's take a look at soybeans. This one we've been telling our subscribers. I put out videos saying, look, you got to be watching soybeans here. 3 consecutive daily buy signals on this. What do we know? Up 3.37% based on our signals, but there's something more important going on with soybeans. Let's take a quick look at that chart. And what do we note? That, of course, there is what's called a bull flag forming here, and this is a breakout. We gave this alert to our subscribers. Put a video out. Here you see the flag bull. Here you see the flag breakout here. This thing's got a long way to run. How do you know? Well, it's simple. You zoom out to that 5-year chart. Look, bottom taking off. Bottom takes off. What do you think is going to happen here? Bottom taking off. Something that I don't think is going to take off much further is the dollar. This thing is now stretched momentum wise. It's pushing up there. Let's take a look at the chart of the dollar here, because I want to get to the other currency, and then I want to talk to you about what's going on with foremost lithium, because there's a huge opportunity in that. And here you can start to see that 10-day chart, what happens. Buyers are below, but sellers are dominating now. Looking, you push that down, there goes the dollar, and that sets up the yen. Now, why the yen? Because, well, we don't want to trade the yuan, but the yen and the yuan trade very similar here. Momentum's negative. This thing is deeply oversold, and this is a huge potential opportunity to the outside of the 21-day moving average. Look at the machine positioning, fairly short here. Momentum beaten up across multiple time scales. Let's take a look at FXY here and what we see as a potential opportunity. Indeed, look at this. Set your target at 60.94. There's clearly buyers. Look at the volume. Price drop down and aggressive buying here. There could be some upside catalyst. So it depends on whether you want, how you want to do the gold trade, what's going on here, but you can hedge yourself easily with bonds, with the yen. Opportunity abound in today's show. And again, links in the description for a 30-day free trial. Why? Because you'll make money. My buddies, they only do a 7-day. But how about this? A bigger opportunity at foremost lithium. Check them out on the NASDAQ on the symbol FMST. Links in the description, pin comment below, because there is a tremendous chance this stock could go up a ton. And they're waiting on some assay results because they just reported their widest intercept to date on, of course, their Zoro lithium project in Manitoba, Canada. Again, go to the website, read the press release, because if these assay results come out very favorably, this is a huge catalyst. We've seen other companies that have similar positive results and their stock just outright launch, which is why we want you to put FMST on your trade screen and now add the 9-day moving average in 21, because here's the opportunity. Here you can see the 9-day in orange about to cross a 21-day in red. Look at the volume profile. It's sitting right at its 1-year volume profile. Sellers are here, so this is very important. Look at the last time it crossed here. Buyers came in and shot this thing up into the supply zone. There's your 35% move. Here's the key part. You've got sellers here that get squeezed out. Go to the long side, and what could be that catalyst? Well, those assay results could absolutely do it. And look at the chart now. over the last 90 days, what's happening? People know something's coming up with formal lithium. They're buying these dips. Every opportunity here, looking to break out. You get through this neckline, and sky is the limit on this. Again, 9-day crossing the 21, huge opportunity. You look at the 10-day, you see buyers completely underneath here, putting support under FMST. Pop that onto your trade screens. Again, we think it's a huge opportunity. But as always, with any company we feature on our show, you're under no obligation to purchase their stock. Sure, do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.